Hello there, this is James, and you're about to watch the latest episode of the Primus Live webinar series. We're about to kick off in about 4 minutes, about that. I'm excited. I hope you're excited too, and we'll all see you soon. Hello there, this is James, and you're watching the latest episode of our Primus Live webinar series. Now, before I introduce you to my very special co-host, remember these little live broadcasts are for educational purposes only, and in no way whatsoever should be ever taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let me introduce you to my very special co-host. No doubt you already know who she is. But anyway, her name is Kaya, and she's our head of investment research here at FX Primus. And she has worked as a portfolio and investment manager with exposure to both public and private markets. Before FX Primus was lucky to get her, she was a senior investment associate at a hedge fund in Singapore and a vice president at Bank of America, Merrill Lynch. Let's welcome Kaya.
Hi, James. How are you? Thank you for having me.
Always a pleasure. Total pleasure, never a chore. I'm very well, thank you, my darling. How are you today? You're looking
doing great,
by the way.
Thank you. It's been now a month since the last time we spoke. A lot of interesting developments on the markets. We will cover many of those. Yes. And I am super excited about today's topic, which is crypto and Bitcoin.
Oh, yes. My favorite. No.
We can't get around from Bitcoin, unfortunately.
I know,
you can't even listen to a news broadcast without hearing about Bitcoin at least once these days. So I think it's only fair that we discuss crypto assets during our life.
I think you're right. It's like just get it over and done with, like ripping a plaster off, isn't it? You know, just get the pain out the way, and then you can obviously move on. But no, okay, then this actually is a key subject, and you're absolutely right. Despite my disdain for Bitcoin, etc., it has been a topic and subject chosen by our viewers, so it is something we do need to cover. And as you rightfully said, it's in the headlines. You can't get away from it. There's no chance you can hide yourself away. Certainly, if you're in our line of work. So yeah, it's a very important subject and a very important thing to talk about. Before we start there, though, should we go over some sort of recent events, what's happening in the market, despite what's happening with cryptos?
Let's do a quick recap. I think since the last time we spoke, the biggest update we have seen is from the US, as always, which is the fiscal stimulus that was approved. Actually, I shouldn't approve. It was proposed by Joe Biden. And I'm referring to the 2.25 trillion infrastructure plan, which allocates predominantly into infrastructure, into broadband, into manufacturing, but also into social programs such as housing and various racial sort of programs. So at the back of this, we are seeing already a lot of inflows into certain sectors, such as semiconductors, such as transportation and industrials. And at the same time, markets are pricing in increasingly higher inflation expectations. And that has put a bit of a stop onto US dollar. I wouldn't call it really a rally, but I shall say US dollar, got slightly stronger in March and has come now down a bit. We are seeing energy consolidating. We are seeing oil sort of rolling over, oscillating between 59 and let's say 61 levels. We are seeing gold being range bound since early March. So I think a lot of the strong market moves that we saw perhaps late last year and earlier in 2021 are starting to roll over. And I think investors are actually starting to think what makes sense in the current environment, in the context of higher inflation expectation, and also potentially higher corporate tax rate that Biden has proposed in order to fund that plan.
So yeah, you can say, like I said, at the beginning of the year, you had a little bit of obviously wind in the sail of optimism, so to speak. Certainly with the US dollar, like you rightfully said, in March, we saw a lot of greenback strength, which is sort of waned a little bit. Gold again. People who know I'm a gold bug. Gold in particular had a very bad end of the month in March, but since then has regained momentum, but slightly back more towards the upside, which again goes to underline what you've already said about obviously inflation fears and things of this nature. But we've also had the S&P 500 again strive to new highs.
Yes, S&P 500 exactly breached 4,000 level, which is sort of like a mental resistance, I shall call it. So that's now breached, and despite being very overbought, S&P could potentially even go higher from here.
Yeah, absolutely. I mean, like I say, it doesn't seem to be. I mean, we've had, again, previous live conversations we've had. We've often said, when will the bull run finally end after a good couple of years? But it doesn't seem to be anything holding it back at the moment. It seems to be continuously pushing forward.
I think it depends, again, what sector and maybe what index we're looking at. So clearly S&P 500 has been pushing into all-time highs, as we mentioned. We have seen NASDAQ 100 being under pressure, and that was predominantly from higher US 10-year yields. So I think we touched 1.77% late in March. And those companies that have a lot of cash flows out in the future, so-called high duration, were clearly under pressure because the discount rate became much higher for those names. So I think depends on the sector. Russell 2000 has picked up, momentum again. Russell was also under pressure for later part of March, but sort of, I think investors are looking again at the reflation trades. I think in March, reflation wasn't popular. Everybody was thinking about something else. But I think now investors are sort of pricing in again the potential growth, which is not yet reflected in energy markets.
No, that's true. I mean, the US, again, we'll touch on this in a minute because I want to talk about the sterling in particular. But the US have been pushing forward, obviously, with vaccinations. They've been doing quite well, haven't they? Here compared to maybe would you say the Europe in particular? And
Europe is 13%, I think, of population, whereas US is like 38. So
yeah, they're doing they're steaming ahead with that. And I think it was back in, what was it, December or January, when the live broadcast we did, with the estimated growth of the EU and Europe in particular was pretty generous, pretty high. But because of their slow vaccination process, they're now dropped down a fair bit, and it's now expected that the US will recover slightly stronger. So do you think that's something to do, obviously, with why we're still seeing a lot of bullish momentum in so many of these markets as well?
I definitely agreed. So just to give a bit of maybe quantitative background, so US is projected to grow around 6.5 to 7% this year. China is probably north of 8%. EU at the moment is projected around 4%, but this is before the latest round of lockdowns in France and Germany and many of the key economies. And UK is also around 4% GDP growth this year, which is I think a bit low because UK has been doing pretty well when it comes to vaccination programs. But again, we're going to see during second half of the year if that reopening will translate into increased economic activity. So I mean, in the US, definitely we're going to see very strong recovery. However, I think markets are pricing in the news a bit too early, and we've had this discussion with you previously as well. There's so many hoops and loops that this process has to go through before actually to be applied. So first of all, Senate has to approve the infrastructure plan. So I'm quite doubtful that Republican leaders are going to accept higher tax rates, first of all, and secondly, they are going to accept additional stimulus for an economy that's already red hot. And there's no way around it. Like, look at what manufacturing PMI did last week in the US, exploded at 64.7, if I'm not mistaken. And the same with non-farm payrolls. I mean, we saw 900,000 jobs added. Okay, 50% of them were in those very cyclical sectors such as hospitality, leisure, education, but still nearly 1 million jobs in 1 month, which brings Q1 to 1.5 million. I think that's just impressive.
It's true, it is. But like I say, again, we've touched on this point a few times. That's just maybe jobs which were lost last year with the lockdown. So this is, again, it's just basically the job people returning. It's more of a case of the public being able to return to the job market.
Correct.
Not the sign of like economic growth and creation of new jobs. It's existing jobs which couldn't be serviced maybe 6, 7, 9 months ago, so to speak. So there is that way of looking at it. I like your point that a lot of things are being priced in, and again, we have spoken about this again. The pure optimism of belief in certain things. This is why we see quite a very sort of bullish start from the end of last year, November onwards, and then carried on in January. But the reality is, a lot of this could be priced in. And when you start seeing certain bits and pieces, it's more of a case of, instead of growth, you're just getting back to where we were before the crisis started in beginning of 2020. So there is maybe a little bit of a false economy with that. The cable, for example, is an interesting one. I like to have a little chat about, because obviously the cable has been performing pretty well until we've just come on air about an hour before we came on air, but it suddenly dropped off. Again, this underlines, I think, where the optimism may be sort of maybe fake market indicator. Okay, because obviously the cable's been performing quite well, because obviously the UK, as we rightly said, is storming ahead with the vaccinations, and everybody thinks they can get back to normal. They are a service economy anyway. But then suddenly we saw a big spike downwards, purely because of this whole question, this AstraZeneca blood clot theory. And of course, we're expecting a press conference in a couple of hours' time, which I think we're all expecting, this press conference, people to come out and say, don't worry, it's okay, But even with that, I think we're beginning to see people maybe pricing in the fact that they've had too much faith in the cable and too much faith in the sterling. And this is why we might start seeing it become under quite a considerable amount of pressure, maybe.
Yeah, it's interesting because UK, I think, just approved today Moderna vaccine as well, right? but pound has been nothing but weak today. I mean, pound USD is down half a percentage point, which is big, and it's been quite choppy, I would say, throughout the week. Despite economic data not actually being overly weak. No. Today, I think we are seeing market services PMI being reported, which sort of meets the expectation. So I think maybe with GBP, the market was a bit too much forward looking, and now maybe coming back to the sort of reality that other economies are going to recover as well, and there aren't that many catalysts, I shall say, for UK recovery. First of all, Brexit clearly is a huge drag, and we haven't still received or heard any comprehensive immigration plan, or let's say plan how to attract foreign investment into the UK. So I think there's just a lot of open questions from the government, and clearly government is very occupied with the COVID crisis, so it's understandable in a way.
Totally, I totally agree. I think it's like the reality hasn't kicked in of what Brexit actually means to economic recovery, in particular, or the economy's performance. We've been distracted with, understandably, this COVID-19 crisis, and slightly distracted by how well the UK has done with its vaccination process. But the reality of that, actually, okay, it's great. We're just getting back to where we were before 2020 happened.
Exactly.
But not. It's even worse when 2020 happened, because now we've got the Brexit thing's going to kick in properly, and we're going to feel what it's like with no actual set trading plan and all this jazz. So, yeah, I would totally agree with you on that.
I will just add a comment. We're discussing about what could be potential market event that's going to bring equities down. I think now, as situation has changed, let's say compared to end of 2020 and early 2021, I think these days it's really key to keep an eye on the long yields. So it seems to me that the US 10-year is dominating a lot of market action. US 10-year, once it's sort of trending higher again, we see flows into US, we see flows into US dollar is getting stronger, emerging markets getting weaker, commodities getting weaker, gold getting weaker, and also capital being pulled away from equities, such as risk assets such as equities. So I think that market participants seem to be keeping an eye on the dollar and the 10-year, because they are dominating at this point where assets are being allocated and where risk sentiment is.
So obviously it's more of a forward guidance type thing, trying to really predict what the long-term picture is, not the short-term emotional excitement and relief, which may be short-lived. that sort of picture.
I think the excitement is over now. At least that's what seems to me. Excitement is over, and I think with the 10-year piercing 1.77 level, it was a bit of like a reality check and cold water on some of the investors that we still have interest rate risk as well. And even if you look at, let's say, Fed fund futures, markets are pricing in rate hike 1 year before Fed has said that they are willing to raise rates, which means that the market may actually test the Fed, which will be an interesting one. The bond vigilantes are coming back. So I mean, ECB President Lagarde has said clearly the market can test whatever they want. We will not budge. We will keep our plans in place. Fed has said the same. I mean, Powell has said the same. We'll see. If 10-year pierces, let's say 2.5, what's Fed's reaction to that?
Yeah, see how they do. Well, we had the FOMC minutes tonight, of course, haven't we? Which,
correct.
Which it will be an interesting read if you're into that sort of thing.
I am more into summaries.
I just keep it short and sweet. Just like me. That's how I always say things. Okie doke. So, shall we move on to our topic of the day, which of course is Bitcoin and cryptos? Take it away.
Let's have a quick chat. Yeah, I mean, we don't have any presentation or slide prepared this time because we just want to have like a rolling discussion. And James, being an expert, I shall call you because you've covered cryptos in your previous life, maybe.
Yes.
Plural, singular. But why do we talk about crypto so much? So crypto assets, cryptocurrencies are pretty emerging asset class, I would say, if we talk about traditional asset classes. But since I would say a couple of years ago, 2017 was the year when, it really became a hot topic to talk about crypto on the premise that, it's an asset class that cannot be sort of expanded by its I shouldn't call it monetary base, but let's call it beyond its base. So it's fixed. If you're in it, you're in it. If you're out, you're not going to get access to it if you're too late. So I think a lot of the younger generation saw this as a way out from the traditional financial system. And, we once had a bit of a joke, a drinking game. You have to take a shot whenever somebody says crypto or Bitcoin. So it was a short night.
I would have a really good night that night then. I'd be okay.
I can imagine.
What makes me British. But yeah.
Exactly. Okay. But with time, we have seen institutions to start embracing as well crypto. And, from institutional financial institutions, we should probably name MasterCard that actually built out an infrastructure to support crypto assets. We should probably mention Morgan Stanley that's building out back office systems in order to support crypto. And other banks as well. I mean, JP Morgan, Citibank, all have said that at some point they're going to start supporting. And what does that mean to start supporting? It's such a bizarre term. Effectively, it means that banks are going to allocate budget in order to build a middle and back office infrastructure, which costs them a lot of money. But once it's in place, it means that you will have full flow through that bank infrastructure, which is critical in order to be adopted by institutional investors. And that's in turn critical to have slightly more stable price. Not that, what we've seen with Bitcoin these days.
Exactly. I mean, the funny thing is, I mean, obviously, people who watch our little live show, they know how much I love this topic. And I'll be open. Many people ask me, why do I not like talking about Bitcoin in particular, or cryptos? Is because, one of the previous roles I did back in 2017, when Bitcoin was first beginning to really, it wasn't the first time, but it really skyrocketed, started taking attention. I was a market analyst. So I used to write so many articles on Bitcoin and my opinion on it. And I used to write other stuff, and I would say, can we talk about the cables? But no, the cable's great, James, but can you write something on Bitcoin for us? What do you think about it? So I wrote an awful lot about it. And I spoke about it so much for like a whole year that I'm like, every time I hear it, I sort of cringe.
That's your limit, yeah.
That's I spoke too much about it. But what I will say is this: what you're saying about institutionals and big industries beginning to embrace it, doesn't that defy the point of its existence?
In a way, it does. But again, define existence. What is the point of existence?
The thing is, if you look originally how it was created, or the original idea of it, okay, was to form a currency which could not be controlled by central banks, could not be manipulated by the big major players, and that you could have your assets or your financial capital into this digital asset, which then would go unmarked, untraced, and the banks couldn't do anything about it. Now, I know that the when it originally started to, and I lived through this particular moment in time. I know initially when it really first catching the attention is what happened with the Cyprus banking crisis back in 2013, because I was in Cyprus at the time, and I know a number of people lost a lot of money from the haircut that the Cyprus Central Bank did. Okay, one night they had this amount in their account, the next morning they wake up and the government's just taken it, and that obviously scared a lot of people because you're like, it's daylight robbery in some cases. So the whole idea of Bitcoin, so that the central banks cannot get it or nobody can manipulate it, so to speak, was the whole allure of it. And obviously, 2017, we saw this great big skyrocketing event. Now that all the other sort of institutions and Tesla being one of the first ones, MasterCard, like you rightfully said, now embracing it as a form of payment, it's more of a case of like, well, we wanted to keep out all the way from the big boys. We wanted to keep it private to ourselves. Now the big boys are getting involved. We're going to lose the whole point of what it was supposed to be for. And that again, for market-wise, for people who are maybe CFD traders, that might be a better thing, because then it will be slightly less, not volatile, still be volatile, but less volatile, because then obviously there is going to be some form of control about the price of it. So yeah, I don't know. What's your opinion on that?
I think with many things, Bitcoin sort of probably is not used for the purpose it was intended at, originally. We all know a good example also from, medical history. Viagra was something that wasn't created for that particular purpose, but here we are. But I mean, a lot of the key thinkers, I shall say, in the crypto space do see Bitcoin rather a store of value than actually a payment method. So I do suppose it could have a purpose for that if you have enough user base, and if you don't have that massive volatility, because I could not sleep putting a substantial amount of my capital into any crypto or Bitcoin, because I would prefer having like either upward ticking or sort of stable level of my capital, not up and down, up and down. But clearly, central banks have picked up on the savviness of people to adopt crypto assets. And something we discussed just before going live is a lot of the central banks in China, in Europe, and in the US are thinking about digitalizing their respective currencies. And of course, the nice noble idea behind that is that everything is going digital. We're going to have stable digital dollar. You don't have to have physical money anymore. But there's also a bit of more darker side to it, which means that, whoever owns the currency also can have full visibility on what's being done with that particular currency, and also prohibit using people for other purposes. So China, with their very heavy surveillance of their citizens, I'm not going to say they have proposed, but they have mentioned that, we can use this digital yuan to assign fines for people who do something we don't like. And it's very easy to identify because China is just covered with cameras. Or we can give stimulus and handouts to people who actually need it, like maybe in a catastrophe zone or whatever. But at the same time, they can also block, let's say, I don't want you to buy that particular share. Again, the GameStop is a good example. So you can use only your digital yuan to buy bread or to buy this or rice or whatever. So, it has a bit of sinister scenario that may play out, especially in an autocratic, authoritarian country, I should say. Please correct my pronunciation.
Don't, trust me, I'm terrible. I may be English, but trust me, I struggle with all sorts of words. So, totalitarian. I can't even try. I'm not even going to try it. What Kaya said. But going back to, I think you're absolutely right, because I think that it's a bit like Frankenstein's monster in very way. What they went out to create, I'm not saying that this is definitely the case, but when they create was something which, again, can give you the freedom and flexibility to pay for things. Then obviously what happened in 2013 showed the real benefit of where a cryptocurrency or Bitcoin could be. 2017, it became something else. It didn't become just a currency as payment. It became an asset to invest in, an asset you could potentially make millions of. If the old story, if you bought it back in 2008, you would be this rich, all that stuff. So it became something completely different. Then obviously the financial industry says, hang on, we need to be a part of this. We need to embrace this, because then, we could also, we're not being cut out of the party, so to speak. Then obviously governments got involved and central banks got involved as a way of making sure that, again, you could pay for certain things, but they can also see what you're paying for and control it, and also to avoid tax evasion as well, of course.
Correct.
This is why so many payments now are done digitally. They don't like us paying with cash, because we could have cash from other sources, hide it under bed. But if we do any digital payment, any wire transaction, and now digital currencies via our phone, all that could be traced and all that could be tracked, so they know exactly how much money is going into one account, out of an account, and if there's any case of us avoiding paying the taxman. So there is a big dark side to it, I think.
And how fascinating is that in the context of Janet Yellen proposing maybe a global minimum corporate tax rate that all countries could or should impose? But also in the context of perhaps evading US-dominated or US-controlled dollar system. So at this point, it's very easy for US to basically cut out any country from global financial system by just blocking their access to SWIFT, which is global dollar clearing platform. And China has actually started working with certain countries such as Hong Kong, Thailand, UAE, in order to build cross-border use for digital currency. So that already shows that these are the countries where Chinese have a lot of interests. If they can settle whatever without having US involved at all, that's brilliant for them, because China has been sort of subjected to US sanctions one way or the other.
Yeah. True. I have a quick question for you. And actually, let's do a quiz. Actually,
let's do a quiz. I love quiz.
Let's do a quiz. Let's do a little bet between you and me. When do you think? And we'll keep it to Bitcoin. When do you think Bitcoin will come in the top 5 reserve currencies? Global reserve currencies. Because obviously at the moment you have the greenback, who's number 1, then the euro, then you have the sterling, then you have the dollar yen. When do you think?
Let's put it this way: Chinese yuan is about 4% at this point as a reserve currency.
Yeah.
So world's number 2 economy is whatever 6th position, 4%.
Yeah, but so they want it that way though. They don't want the strength in their currency, though, do they?
I think they would want broader acceptance of yuan. Whether that comes through strength, it's all relative, compared to other. But yes, valid point. They are exporting countries, so clearly they would want to keep their
currency low.
Currency low. I'm going to say never. That's going to be my answer.
You reckon never?
Never. And on the premise, because it will be blocked by governments.
Really? Okay. I was going to go, and I'll tell you what, because I think it's the way I see it, though I dislike it, and I don't think it's now become what it should be, what it should have done originally. There's no getting away from it. Some form of crypto will always be used as a form of payment, no matter which one will actually be chosen. I can see at one point every single person will have a euro account or a sterling account, depending on what country they have in. But they will have one crypto which they will use to pay for certain things, and eventually I think that will go universal, and I think central banks will do it as well. So I'm going to go. What's the year? 20? I'm going to go 2050.
2050. Okay, make sure that you're around to
again,
that fear.
This is a good thing. This is a good thing. This is a good thing, because I might not be around by then, so I can't say if I was wrong or not. So that's not too bad. How old would I be then?
I shall come and find your kids in that case.
You can tell my son, your daddy was wrong, or your daddy was right. There you go.
But James, I mean, it's a very, very valid point. But all I'm going to say is that I think governments got a bit of a scare when Facebook sort of announced that they're going to start developing their own crypto. And Facebook has by far more members than any country has citizens. So I think governments realize that they need to really start preparing. And I think as the last resort, there will be some sort of action taken, not allow people to actually access Bitcoin and other cryptocurrencies. Because so far, the best use case for Bitcoin, unfortunately, is identifying a sort of malicious activity. It's still used in transactions that shouldn't happen, either money laundering or trafficking people or drugs or whatever. So until that changes, I doubt governments will allow large-scale adoption of Bitcoin or any other crypto for that matter. And again, when we talk about financial institutions such as MasterCard, we have to draw the line between allowing Bitcoin to flow through their pipes versus a stable coin. So Bitcoin, by definition, is a bit of speculative asset, meaning there's nothing it's being pegged against. Yeah, we can talk about Bitcoin USD sort of value. But stable coin as such actually is backed by something. So you can have gold stable coin, for instance, because it's backed by gold somewhere. So I think MasterCard is allowing those stable coins to go through their pipes. Bitcoin, as per my knowledge, not yet. Maybe, our viewers know better. If anybody knows if it's Bitcoin they're supporting, please drop us a comment. But yeah, I think that also institutions are being quite mindful what cryptos they are accepting, because at some point, somebody may come and chase them. Hey, we used your pipes to process, I don't know, this transaction that wasn't supposed to be transacted, and so on and so forth. So you get what I mean. Nobody wants to take the risk.
Of course, because let's face it, banks are never questioned about doing any questionable transactions for other, they're always well behaved banks, aren't they?
Always well behaved.
Always well behaved. Not. Is there any crypto in particular you think is worth keeping an eye on or watching in the future?
To be honest, I don't spend too much time on crypto as such. I do keep track of Bitcoin because it's clearly traded, on our platform as well for certain, jurisdictions.
Yes.
So Bitcoin definitely is on my radar, and Bitcoin actually is an interesting one because I think my sort of assumption is that a lot of Bitcoin trading is done through algorithms. And why I say that is because when I do my daily analysis of Bitcoin, when I throw out my Fibonacci retracements, it's almost perfectly how well, price reacts to certain statistical points. You can see a lot of support resistance at 62 percentage point or 50th percentage point and 38th percentage point. So it seems to me that a lot of the activity actually in the Bitcoin trading world is driven by algorithms. I don't think there's a lot of people behind this whole sort of machine.
Yeah. I mean, I remember again, I'm going back to my experience of 2017. A lot of people are asking, can you use technical analysis on reading where Bitcoin could go? And my answer was no chance, because it hasn't got a history like something like the cable or the euro. It doesn't have that, and it's not moved in the same way as price action. Whether that we can start seeing maybe a little bit of technical analysis, certainly if you're doing Bitcoin CFD trading, maybe you can see a little bit of that now. But again, whereas I'm not always 100% confident in the technical analysis when I'm looking at currencies, I'm a little bit more confident in that technical analysis with currencies because it's all based on history. Bitcoin, where it's like this, is very difficult to maintain a history of price action with that particular asset. The only one which, and again, I think we've spoken about this, the only technical analysis theory I've ever seen which worked with Bitcoin, and that was the Elliott wave theory, which again,
Fibonacci retracement, effectively.
Yeah, exactly. It's got nothing to do with, let's say, price action. It's to do with madness of crowds. It's to do with the buyers and sellers' behavior, and that's how it works. Definitely.
Yeah, I agree. I mean, I think, even if you look at the Bitcoin chart, I mean, if Mike will put my chart up here, I'm just gonna show. It's literally the perfect sort of upward trend. We're seeing a bit of Elliott waves here, and what I was referring to, those Fibonacci retracement levels. Just gonna see if this is still valid here, because these are drawn a couple of days ago, perhaps. A lot of colors, as always. I apologize for people who are not used to seeing so many colors. But point being is that, it's actually, if you start using those statistical points, Bitcoin normally reacts to price extremely well. And for me, I generally look at 4-hour chart. I don't even look at the daily chart when it comes to Bitcoin. And in that time frame, I would say technical analysis does work, not to the extent as we see in currencies. Yes. But definitely it's already starting to show some sort of signs. However, when we talk about all-time highs being, almost every week, there's no resistance ever. So that's already a big part of the technical analysis that's left out from Bitcoin. But interesting data point, which I mentioned again earlier, we see now market capitalization for all crypto at around 2 trillion, which is pretty significant as of this month. And global wealth levels are about 360 trillion. So impressive growth in crypto space, I would say.
Definitely. Well, as we said at the very beginning, there is no getting away from having to talk about it, because it's here, very much dominant in the financial markets. There's nothing there. Anywho, right, should we move on to see if we have any questions? I don't think we have any questions at the moment, but okie dokie. Well, anyway, we've got we're scheduled for a next live, I think on the 21st of April. Is that right?
That is correct.
2 weeks away, 21st. The subject matter for that one will be released shortly, and we will, we'll maybe delve back into maybe a bit of fundamental analysis again, because I think that was quite an interesting topic to go into, and then obviously after that we'll release a schedule for the following week. So remember, we do it every 2 weeks or so. We have got one question. One question's just popped in, and this is about gold, actually, away from Bitcoin.
Okay.
Wow.
We'll pull out gold chart.
Let's pull out the gold chart. It says, how's the gold trend looking in the future? So what's the trend of gold in the future?
Okay, looking at gold here, I'm going to zoom into the daily chart. And basically, we are seeing price action since early March. So gold has been very much range bound. So it's been sort of in between, let's say, 1,745 to 1,683-ish. So a lot of discussion about gold actually among market participants as well, from the perspective like gold doesn't seem to be acting as an inflation hedge anymore. So it seems that 60 years worth of correlation is breaking down, and that's coming to our previous live maybe about a month ago about correlations. So correlations, they change with time, and seems that gold is losing that inflation hedge connectivity. And also the sort of movement versus US dollar is not as pronounced as it was before. Having said that, if we look at daily charts, so gold has been trending higher, just breaking 8-day moving average, breaking 21-day moving average. We see 34-day moving average here offering resistance. We are nearing to not overbought yet, but if we look at stochastic, we're sitting at 68 right now, so sort of pointing higher. But for me, what's concerning when it comes to trading, let's say potentially gold, is that there's no clear trend when I look at DMI plus and DMI minus, which is the last section here. So I would like to see one number, either the red or the green, to dominate, and one of them to be at least 25 or higher, because that shows one particular trend is dominating. ADX is at 32, which means there's energy in the trend. So the movements are pretty forceful, but they don't have like very, very clear trend, or at least in the short-term basis. Yeah. I'm just going to pull out a weekly chart as well, since I know we have a lot of viewers who trend slightly longer time frame. And on the long-term chart, well, it's a bearish momentum. Price sits below all moving averages. I don't even know where 200 is slightly below. 200 is somewhere here. But short-term basis on the weekly chart, it's still bearish. We are borderline being oversold, and there's almost no momentum if I look at DMIs and ADXs. So for me, weekly chart says that maybe a bit of recovery to get exit the oversold levels. I would see resistance level near 8-period moving average, 1,749, and on a daily chart, seems to me again that sideways movement seems the most likely outcome at this point.
Yeah. You say, like I said, I'm looking at it on my daily, and it is very much ever since what day was this? It's just since, say, the middle of February. It's been sort of very much range trading. I can see an area of interest. There is support around $1,675.32, not to be precise, but obviously a level of support around there. And to be fair, resistance wise, we're sort of trading a little bit around that now. This is on a daily. So realistically, you are looking around at this 1,749 sort of level. So we're close to it. We're not quite there. So really, since definitely the beginning around about the 12th of Feb, around that time we have very much seen it range trading. So I think at the moment the market hasn't quite decided either on where the direction that the yellow metal may go.
Yes, and when we talk about the sort of inversion correlation with US dollar, just run a test. If I'm going to put here DXY, which is US dollar index, I can't even add it here, can I? Let's see. I can. Okay. Okay, fine. There is a bit of sort of a inversion, I suppose. Orange line here being DXY. But it's breaking down, and it's actually very confusing to market participants who are using gold always as a hedge, and people are thinking maybe we should think about Bitcoin going forward as that hedge. But of course, we have to go through a proper cycle for that in order to make any conclusions about whether Bitcoin can replace gold at some point. But gold is an interesting one. For me personally, I always have views on gold, and at this point, I have no views on gold.
No, it's range bound as it stands, and I think the market's waiting to decide between those two levels we spoke about. That's where I'm sort of trading between those two levels anyway. It's definitely range bound at the moment, and give it a little bit of chance for the market to decide how it feels about the good old yellow metal. I have another question here. What about Aetherium? What's our opinion on that?
Short answer, no specific views about Ethereum. Like I said, generally I tend to treat cryptos as one asset class because at this point they are treated as such at the institutional level. I realize there are thousands of different coins out there. However, as we are in this particular cycle, there is a lot of what's a good word? Risk on sentiment, I shall say. So people are trying to chase whatever they can, and James, I kid you not, once a week at least, I get a text, let's say to my Instagram, from people that I know, people I don't know. Oh, can you please give me a guidance what crypto to invest in? So that shows that we are in a peak, we are in a bubble.
Yeah. We do get it. Excuse me. Excuse me. I mean, Ethereum. Am I saying it correctly? I hope so. When you talk about cryptos, really, certainly when it comes to sort of the markets, there is hundreds, thousands out there, especially from 2017 with the whole ICO madness. The initial coin offerings, which just went mad. There's even one of my favorites is the Nicolas Cage coin. I don't know if you've ever seen that.
I've seen Dogecoin. Dogecoin. That was enough for me.
Yeah, there's that one, but there's Nicolas Cage coin, which is just mad. And then you have the Putin coin, believe it or not. And there's thousands out there. But when you really talk about it in relation to market movements, you are really talking about Bitcoin, Ethereum, Ripple. I think Neo is a new one as well. It's not a new one, but it's one which takes the headlines. So Ethereum, I think, has always been regarded. It's one of like the little brother of Bitcoin. maybe not doesn't get the limelight, so to speak, doesn't have the history, but it is obviously an up and coming crypto. And when you talk about it in financial assets or financial trading, you really are only talking really about 4 or 5, and Ethereum being definitely one of them. I got another question here.
When it comes to, I'm just gonna interject one comment. So again, taking a step back and treating all crypto as one. So as somebody who wants to invest in crypto, I mean, the always the same recommendation: do your own independent research always. Who is the provider of the currency? What is the settlement platform? Who's the custodian? Are they trustworthy? Because you'd be surprised how much money is lost because the custodians are not trustworthy, or the keys get stolen, or whatever. So first of all, if you are an investor, make sure everything is trustworthy. And if you are, somebody who's in their, earlier age of their life, I think there's no other way than to allocate some of the capital into crypto. I don't think people, my generation, we have to put something into crypto because that's the cheapest call option on that actually becoming, huge one day.
Yeah.
If you're a trader, then go ahead and speculate if that's your strategy.
Totally. I should go that point because I say doing your own research and due diligence. Certainly when you're looking at ICOs, initial coin offerings, which was just huge. Obviously, because of everybody wanted to jump on Bitcoin's bandwagon. There are so many, and I've made a joke about the Nicolas Cage coin, which does exist, the Putin coin, which does exist. All these coins. If you ever wanted to invest in anything like that, please do your own due diligence. Exactly what Kaya said. Check out their white paper as well, because every ICO has to have a white paper. The purpose of the coin, what the coin is going to be ideally used for. Do check it out, because fortunately there is a lot of bad people out there who aren't so good. Right.
And there are good people but there are good people also whose plans fail, and that's also an option, right? But if you want to speculate, I mean, if you want to speculate, I'm sorry to say, it makes no difference what you speculate in. If you want to speculate, environment is the one, is the sort of ecosystem, I shall say. So if you want to speculate, then things tend to go up all in one bunch, and go down in the same sort of flow. So it makes no difference.
No, it doesn't. It doesn't. Otherwise, we'll be living on a beach somewhere, multimillionaires, if it was that easy. I have one more question from our lovely audience. Now, does the long-term success of major cryptos, I think we've touched on this a bit already, depend on central banks' approval, or is crypto completely out of hand of the central banks? Is it too big to fail? So does the long-term success, does it depend on the central banks jumping on board and embracing them?
Central banks have already jumped on board. I think every single major bank has identified the need for crypto, and that's again that very targeted sort of monetary, I wouldn't say even stimulus, but I'll just say monetary policy that crypto effectively allows to do. So like we mentioned, if you need to give stimulus to certain people, you can just give them that cryptocurrency. If you need to take money away from some people, you can just literally take it away from them. So they define that sort of use case. But if governments can actually block, let's say, third-party crypto, my answer is, I think they can. I am not a technical expert. My understanding is it can be done through certain protocols, and I wouldn't think that they would shy away from that if need be.
Yeah, if they want to, they can do. Simple as that, really. Simple as that. Brilliant questions. Thank you so much. That's all the questions we have for today. Remember, ladies and gentlemen, we'll be releasing the schedule for the next couple of Primus Live, one on the 21st of April, which will be receiving information on what subject we're going to cover. I think we've got some ideas, me and Kaya, what we're going to do, but it's going to be fantastic as always. On that note, Kaya, would you like to say goodbye to the good people?
I want to thank everybody for joining. We are doing another one in 2 weeks, topic to be, revealed, as James mentioned. But thank you again for joining, and thank you for submitting your questions and comments.
Absolutely. Once again, guys, ladies and gents, don't forget, these little live broadcasts are here for your purposes of education and learning. So please carry on sending in your questions and sharing your ideas of any topics you want us to cover in the future. On that note, remember, these little live broadcasts are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you out there, trade safe.